also notice a QR code on the card which links to a short awareness video. I would like to remind participants of the following points. Please wait until I recognize you by name before speaking. For those participating by video conference, you can click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. For those on Zoom, at the bottom of your screen, you can select the appropriate channel for interpretation, either floor, English, or French. And for those in the room, you can use the earpiece and select the desired channel. For members in the room, if you wish to speak, please raise your hand. And for members on Zoom, please use the raise hand function. Pursuant to Standing Order 1082 and the motion adopted by the committee on Monday, March 9th, 2026, the committee will resume its study of household debt in Canada. But before we do that, I see that Monsieur Garon a une pointe d'ordre.
Oui, très rapidement, Madame.
Yes, very quickly. We consulted each other between parties, and I wanted to propose, I don't know if we need a motion for that, but we should open the portal for budget consultations. It should stay active for an extra month. I proposed until 29th of May, Friday, so that people can participate more. And it's in line with the calendar that we had agreed upon. And that's the comment I wanted to make.
So we discussed this in advance, and I'm definitely supportive of the idea of having the pre-budget briefing submissions open, the portal open for longer. The only thing I wanted to just double check was that we have enough time for the analysts to do some analysis before we break. I think it's June 22nd is officially the last sitting day. Sometimes the House rises just a little bit earlier before the summer. Am I wrong? Was it the 19th? Pat Kelly's correcting me here. In this case, I totally don't mind. But if it's the 19th, I apologize. But whatever date it is, I just want to make sure with the analysts, so maybe Chair, just to be assured that the analysts will have time to produce a kind of a what we heard report before we rise for the summer, because I would value having that. So is sort of 3 weeks enough time is just a clarifying question.
Of the briefs. Okay, so just a couple of points that, I mean, because the analysts are just hearing this for the first time, they need to kind of talk about it and see what it is. La seule commentaire que je ferai,
the only comment I may make now is that there is the issue of translation. So now that we have the deadline of April 30th, we anticipate 1 month for the briefing notes to be translated. So that's the time that we need. So if we need to extend the deadline, then we should anticipate an extension for translation of those briefs that we will receive after April 30th. So that would be an additional 3 weeks. So take that into consideration as a committee. But maybe at the end of the meeting, we can come back and talk about it, Mr. Chamble.
Perhaps if other members are agreeable, and Jean-Denis, I hope that this is agreeable to you, that maybe we could suggest May 22nd, so that gives us 3 more weeks of extension, but still allows for a full, roughly a month for the analysts to do their work, which I think is what we're hearing is the sort of allotted timeline that they would expect.
Okay, parfait.
Okay, perfect.
Okay with that? Okay, so seeing that in the committee there is agreement like this, it's so nice. Thank you, everybody. We'll extend the deadline to May 22nd. Maybe we'll encourage folks, if their briefing is ready by April 30th, to submit by April 30th. But if there are people who need more time, we'll allow briefs to be received until May 22nd, but encouraging folks to do that earlier. Okay, wonderful. Merci tout le monde. So returning back to the meeting at hand, I would like to welcome our witnesses. For the first hour, we have Mr. Ronald Butler. We also have Mr. Peter McKenzie, the Senior Policy Analyst from C.D. Howe Institute. And we have Ms. Vasiliki Bednar, from the Canadian Shield Institute for Public Policy. She is the managing director. Each of you will have 5 minutes for your opening remarks, and we'll go in that order. So, Mr. Butler, we'll start with you, please.
Thank you, Chair, Mr. Co-Chair. I don't know the right words, but listen, I'm honored to be here. I'm always honored to be here. I'm an old man who's followed politics my whole life, and it's still a thrill. So thank you for inviting me. I enjoy being here. Our mortgage brokerage operates in 3 provinces in Alberta, British Columbia, and Ontario. And we get a lot of calls. We're talking about 1,700, 2,500 calls a month from people who have mortgage issues, from people who have renewals, chiefly renewals. This is the biggest time for renewals ever. More renewals, mortgage renewals than in the history of Canada is happening this year. So we get a lot of calls. And overwhelmingly, they illustrate the nature of our economy today in Canada. They illustrate a K-shaped economy in that we have a certain number of people who call us, and they're quite comfortable with the increase they're getting, because 65% to 70% are getting an increase in their mortgage because they got the mortgage 5 years ago. Rates were incredibly low, and they're higher now. So people have 1.69 5-year fixed in 21, and now they're getting about 4%. So that's a significant rise. The group of people at the top of the K, they're somewhat annoyed and a little concerned, but they're fine with it. They can easily handle this mortgage rate increase, and their payment increase is never the same amount. It's always a little bit lower percentage-wise than the actual rate increase, so they can manage it. However, for the majority of people at the bottom of the K, it's a problem because in Canada today, we're all aware inflation has eaten into family budgets. And when we then move it forward into a 20% increase, let's say 22% increase in their mortgage payment, that is a different world. It's a meaningful change, and it's a problem. So we're approached to do restructuring, refinancing, change amortization, to lower payments. And what really hits us when we do this is that there's becoming an incredible importance to when you bought your house. That sounds crazy in a big Western country like Canada, but if you bought your house 2015 and prior, you're probably pretty good. If you didn't refinance, you got a good price on your house when you bought it. You've got a smaller mortgage, and you are in pretty good financial shape. However, if you bought 2018 and onwards, you probably have, particularly in some provinces, you have a very expensive house, you have a large mortgage, and you're not in such great financial shape. In fact, in some cases, 50% of your net after-tax income is going to making mortgage payments, property tax, and other sorts of utilities and other types of payments. So there's something kind of fundamentally wrong about that, if you think about it. Like, should it just be this strange bit of magical luck that when you were born, and because I'm a boomer, so I always make fun of boomers. We're all just sort of people who don't realize how lucky we were. But that's something, right? That's interesting. That should be interesting to everybody in government, that this moment when you bought a house, when you were the right age and you bought that house, because today in Canada, in the 1980s, the average first-time buyer was 27 years old. Last year, they were 40. So that should be meaningful to everybody in government, that we are denying a lot of young people the chance to own a home. Because if you got to wait till 40, you're not young anymore. At least I don't think you feel young. 27 is a much better age to be buying your first home, and that's realistic. So thank you again. Thanks to the committee. If there's any questions, I'm happy to take some questions.
Great. Thank you very much, Mr. Butler. Mr. McKenzie.
Madam Chair, members of the committee, thank you for the invitation to testify today. My name is Peter McKenzie. I'm a senior policy analyst at the C.D. Howe Institute, where I lead the Financial Services Research Initiative and the Financial Regulatory Excellence Initiative. My remarks today will draw on the Institute's work on household balance sheets, financial stability, and the housing market. Canada has G7 leading household debt levels and rising consumer insolvencies. These are concerning, but they do not signal a systemic crisis. The banking system is resilient, aggregate household net worth is at a record high, and pressure on household cash flow has eased from its 2023 peak. Severe pressure is concentrated in specific groups: younger Canadians and highly leveraged homeowners in large cities like Toronto and Vancouver, and policy response should be calibrated to that distributional reality. Let me start first with the aggregate picture. The measure most often cited in public debate about household debt is household debt relative to disposable income. This ratio rose from about 114% in 2000 to a peak of 188% in 2022. It has since declined to 173%. That number alone does look alarming, and it is. Households have more debt than income. But the measure that actually tracks a household's capacity to pay is the debt service ratio, or DSR. The DSR is the share of household income going to principal and interest payments on outstanding debt. When interest rates fall or income rises, a household can carry more debt without a larger share of income going to payments. The DSR was largely flat over the same period that household debt-to-income ratio rose dramatically. The DSR stood at 15% at the end of 2019, climbed to a record 15.2% in 2023 as the Bank of Canada hiked rates, and has since eased to 14.5% in the fourth quarter of 2025 as rates have come down. The banking sector has absorbed the shock. In fact, the IMF's 2025 Financial System Stability Assessment found Canadian banks and non-bank financial institutions generally resilient to severe solvency and liquidity shocks. OSFI's annual risk outlook, released earlier this month, identifies real estate secured lending among its top risks, while concluding that institutions remain well positioned to navigate the environment. Both documents point in the same direction: system-level resilience with some serious tail distributional stress. Now, looking at that tail risk and that part where there is stress, or the household distribution that is hurting, we see younger Canadians. Looking at the Bank of Canada's Canadian Survey of Consumer Expectations for the fourth quarter of 2025 shows Canadians aged 25 to 54 reported a record 27% probability of missing a debt payment. Nearly half of those aged 18 to 24 expected to miss a payment. Canadians aged 55 and older reported just under 1% chance of missing a payment. Household net worth reached a record $18.6 trillion at the end of 2025, but the wealthiest 20% of households hold the majority of that increase. Younger Canadians who did not yet own assets, homes, have participated little in the gains. And I'll make a further point on the rise in insolvency filings. A filing can mean two very different things. A household is cash flow insolvent when it cannot meet monthly payments out of its current income, even if its assets exceed its debts. It is balance sheet insolvent when its debts exceed its assets outright. A homeowner in Toronto, for instance, might be facing a payment shock at renewal, is more likely to be cash flow insolvent. The equity in the home is there, but the monthly room to make the payment is not. A renter in their 20s carrying unsecured debt without assets is more likely to be balance sheet insolvent. And these two situations call for different policy responses. And then finally, this brings me to my three recommendations. First, federal agencies should center their public reporting on household financial health on the DSR and the debt service ratio, and how it varies across income, age, and region, rather than other indicators such as debt to GDP or debt to income ratios. The breakdown will show stress is concentrated in two groups: highly leveraged homeowners and younger Canadians. Second, the Office of the Superintendent of Bankruptcy should publish statistics that distinguish cash flow insolvency from balance sheet insolvency. And third, federal infrastructure, immigration settlement, and transfer design should be oriented towards growing mid-sized Canadian cities into economic alternatives to larger cities like Toronto and Vancouver. Canadians who move to those cities for work are more likely to take on outsized mortgages to afford a home, and each buyer joins a highly leveraged segment. Policies often focus on demand side measures that shift where pressure lands, but they do not reduce that pressure. Adding supply only within larger cities does not resolve affordability on its own, because in-migration from smaller
Thank
centers
you,
follow.
Mr. McKenzie. We'll look forward to continuing the conversation during the questions. Ms. Bednar, you now have 5 minutes, please.
Thank you, Madam Chair, and members of the committee for the opportunity to appear. My name is Vas Bednar. I'm the managing director of a new think tank, the Canadian Shield Institute, which is focused on securing our economic sovereignty. I'm appearing today to elaborate on an essay that we published in the Walrus magazine. It was titled How Buy Now, Pay Later Seduced a Generation and Trapped It in Debt. We also proactively submitted a brief to this committee on this invisible problem of buy now, pay later in Canada. A country loses economic sovereignty when it loses that visibility into how households are coping and when private credit products start compensating for what is fundamentally a public policy failure. Buy now, pay later is more than just like a trendy checkout feature. It's a new layer of household debt infrastructure, and right now, too much of it is invisible. Buy now, pay later is often marketed as budgeting help for young people, but in practice, it's micro-lending at the point of sale. It lets people typically split a purchase into 4 or more payments and defer the full cost of something major that they'll buy. I know you know what it is. And I think this sounds pretty harmless when we're talking about something like a sofa, a laptop, or a one-time emergency purchase. But the concern that we raised and wanted to bring forward is that there's evidence that buy now, pay later is increasingly being used to bankroll everyday routine needs, groceries, clothes, household goods, other everyday expenses. This tells us 2 important things. The first is that we have that data blind spot. Canada has yet to clearly define buy now, pay later in our legislative infrastructure. That means that it doesn't show up in the numbers that our colleagues, my colleagues appearing today, my friends cited, and that's a problem. Other jurisdictions have moved much faster to sort of have that legislative infrastructure reflect those realities. Second, buy now, pay later is symptomatic of a deeper prosperity problem. People aren't using these products because they're financially careless. They're using them because the math is not mathing. Paychecks are too low, costs are too high, people are plugging holes. We need to pay attention to that and not demonize it. That is why we think that this committee should resist treating buy now, pay later as a narrow consumer protection issue. Yes, we need more disclosure and understanding, but we also need to step back and ask ourselves why a product that's designed or was designed for larger discretionary purchases is becoming part of how people manage their everyday daily lives, including being used for groceries. Our debt challenge in Canada is symptomatic of the broader prosperity and productivity challenge that many have been thinking about for quite some time. If wages don't keep up with costs and debt becomes a bridge, right? Rents, grocery, telecom bills, transportation, and basic services have been rising faster than incomes. People are reaching for this credit product. Our productivity is weak, investment is thin, and our living standards have stalled, right? We think that buy now is a clear example of that shift. Our recommendations are twofold. One, that this committee should identify and continue to pursue that gap. It's not that Canada has never considered buy now, pay later, or that a committee has never heard it. We just haven't gotten to the finish line. And if anything, we sometimes maybe hide behind federalism a little bit. We sort of say, certain jurisdictions say that's not their key file or it's not their key element. But second, we could maybe stretch the mandate of this study a little bit, right? Debt is a prosperity signal too, and rising reliance on a short-term consumer credit product, again, that's increasingly invisible and increasingly targeted to young people, should prompt bigger questions about wages, market concentration, competition, productivity, housing costs, and whether public policy has allowed too many essential markets to become too expensive. Canadians cannot manage what policymakers can't measure, but we also can't regulate our way out of a prosperity problem just by polishing our data dashboard. Buy now, pay later needs to show up in our accounting, but the bigger question is why so many people need it in the first place. Thank you so much. I look forward to the questions.
Great. Thank you so much, Ms. Bednar. Thank you to all of our witnesses. We will begin now with Mr. Kelly for 6 minutes, please.
Thank you. Mr. Butler, so witnesses have testified that Canadians are paying their debts by refinancing, stretching them out over a longer period of time, by exhausting their savings and by skimping on other purchases, including basic necessities. Is this a sustainable way to deal with increasing indebtedness?
It is not sustainable. It constantly proves to be unsustainable. We have observed in the last 18 months a somewhat alarming growth in power of sale transactions, bank ordered sale transactions. Mortgage default rates have continued to increase. We anticipate mortgage default rates will also increase this year, throughout the year, and potentially into next year. There is just not any good way to handle extremely large mortgages, which people took on in 2020, 2021, and 2022, first quarter. As soon as the rate goes up, unless incomes have soared, there's no easy way to manage that.
Okay, so really the only way out of the debt scenario we have, which I would say also extends to the federal and even provincial deficits, is a more productive economy with higher wages, more economic growth, more economic activity, so that and until people's wages and salaries can grow into servicing these debts, it's just a spiral.
You know, the biggest change in the 30 years I've been in the mortgage business is that much more normal salaried people could buy houses 30 years ago. The difference is striking. It was quite normal for the produce manager at a grocery store and a part-time nurse to be able to easily get 5% together and buy a home and comfortably manage it quite successfully. Those days are gone. The people we see buying houses today are almost consistently in Ontario anyway, and certainly British Columbia. They're almost consistently in the top 10 or 15% of earners in the country. Those are people buying houses. Or they're people getting massive assistance from their parents who are using some of the accumulated equity in their homes to assist their kids in buying a home. So that, you know, I don't mean to sound nostalgic, but I far preferred the old way where ordinary people making ordinary wages could go out and buy a home. So obviously there's been some stagnation in wages.
Right. How long would it take a normal person, such as you've described, a person with a good, solid, full-time job? How long would it take them to save up the minimum down payment on a home in Toronto?
Well, if we look at just the GTA, particularly Toronto, the reality is they never could. That's the reality today. Even with falling prices, even with prices have fallen like 26% in the GTA, they still couldn't. If you're running about $110,000, $115,000 income, you have to pay rent, you have to eat, you have to live, you pay taxes. You could not possibly accumulate a satisfactory down payment for a house price that's still like a sort of just under $1 million.
Even if you could, would you be able to qualify for the mortgage?
You would not.
Okay, so a normal person with a normal job cannot save up the down payment or qualify for the mortgage. So we're back to now mom and dad.
In Ontario, they are absent from our practice, yes.
Absent from your practice. How about British Columbia?
They were absent sooner in British Columbia.
Some of the other larger cities, Calgary, Edmonton, that are not in
Well, Calgary may have caught the Toronto virus, so we'll see what happens.
Okay.
Anyway.
It's really impossible to talk about the debt crisis without talking about real estate in Canada. What's happening right now in the real estate market? What's the health of the real estate market in Canada right now?
Well, the health of the real estate market is that in Quebec, it's probably just starting to slow down. It was a very buoyant market. Atlantic Canada is experiencing considerable run-ups in prices, which may turn out to be against their own interests, because Atlantic Canada has never been a hotbed of massive incomes. But there's, again, this sort of virus that comes from these big cities has gone across the country. I can only suspect that there will be more price reduction in Ontario and British Columbia this year. Again, a slowdown in price appreciation in Quebec. And there will be more power of sales. There will be more people struggling to make their mortgage payments. We reached a landmark in the GTA last quarter. there were absolutely no condominium starts of any description in the GTA
Thank you,
in the
Mr.
last
Butler.
quarter.
That
So-
concludes the. Oh, sorry, Go ahead. You have
I
one
think
more.
we've got another minute. If you can continue there. Because we've continually heard that there will be housing supply and that steps the government have taken will lead to housing supply. We've argued that no, for years we've said it's going to get worse before there's any sign of it getting better. So the current health of and situation of housing starts in I guess the market you're most familiar with in Toronto.
In all of Ontario, with the minor exception of Ottawa, the housing starts, even low-rise housing, not just high-rise housing, have fallen off a cliff. That's reality. They are so low as to be dangerous to the health of the construction industry in the province of Ontario.
All right. Thank you.
Thank you, Mr. Kelly, and apologies, I was eager there. Mr. Leitao, you have 6 minutes.
Thank you very much. Mr. McKenzie, you were talking earlier about the 3 points you wanted to, where you thought that policy should focus. I agree with you on that the debt service ratio should be the focus of our attention. And then the cash flow versus balance sheet insolvencies. But you didn't have time to, the third point you were making, I'd like if you could best expand on that a little bit, the move or the encouraging the mid-size cities. Could you perhaps elaborate a bit on that?
Yes, for sure. I'm happy to. So the third recommendation that I was making is that federal infrastructure and things such as immigration settlement should be geared towards growing mid-sized Canadian cities. I think in Canada we need more alternatives to larger centers like Toronto and Vancouver, where you have insanely high housing prices relative to income. Canadians who move to these large cities like Toronto and Vancouver are more likely to take on outsized mortgages to afford a home. And then they're sort of joining that highly leveraged segment of the population that I was talking about, where there is this debt crisis. And the policies often around like affordability for housing focus on the demand side. But if you make housing slightly cheaper in Toronto or Vancouver, then you just get in-migration from smaller centers. So growing these alternatives, sort of growing the mid-sized cities in Canada, and we definitely have the ability to do that. We have great cities with great world-class universities, and growing these cities will help grow the Canadian economy, and then at the same time also make it more affordable.
Thank you. So you would recommend that policy would encourage, promote investment in smaller cities, so that you can get better jobs, so people would move into those areas.
Yes, exactly. And I think a lot of the draw for larger cities is the incomes. You get higher incomes in Toronto, and people want to move there to work. And if we can sort of grow out some of these smaller cities, you've seen it in the United States happen, with Austin, for instance. Like 20 years ago, it wasn't really considered a major center, and now people are moving there and they're having economic development. And I think we can do the same, like in Ontario, maybe with Kingston. There's lots of different options. Kingston just comes to mind. They have a world-class university, Queen's University, and being able to sort of grow the economy there as an alternative will give people an alternative from moving to Toronto, and just sort of increase the options that people have for when they're looking for both higher incomes, but then also not wanting to spend all their money and go into large debt to afford a home.
The meeting we had, I think, was not the last one, but the previous meeting. One of your colleagues, another economist, was pointing to the fact that in Canada we've had a period of excess borrowing, so that households borrowed excessively, starting with the aftermath of the financial crisis, 2007, 2008, when interest rates went way down, and then the same thing again after the pandemic. What do you make of that? The excessive borrowing, and if that's the case, whose fault is it? If we're not in the business of blaming anyone, but is access to credit too lenient in Canada? Did interest rates stay perhaps too low for too long? I mean, if you could address.
It's a hard question to answer in some ways because there's so many confounding factors involved in it. I would say there's certainly reasons that the federal government or governments in general may take on debt, like in response to the great financial crisis and in response to COVID-19. Whether or not they took on too much, I mean, when you see deficits balloon the way they have, I mean, they probably did. They were responding to crisis, so in some ways it's understandable. I would say that corresponding with a period of very low interest rates also allowed households to maybe take on more debt because they didn't have to pay as much monthly to service that. And when you have a low interest rate environment, it's natural to increase debt. I wouldn't say like from a business lending perspective, I wouldn't say Canada. Like I think the response to the great financial crisis and sort of the Basel III capital requirements has actually maybe made the banks draw back a bit from business lending, especially on the smaller end, which probably has contributed to our decreased productivity. So on that end, I actually think it's important to have pathways for more business lending and maybe have OSFI decrease prudential business lending requirements. But on the consumer side, like homeowner side, the low interest rate environment plus the heavy government spending did allow for consumers to take on quite a bit of debt. But as we can see, they seem to be handling it, at least on the average, okay, when you look at the debt service ratio.
Okay, I guess I'm running out of time. But Mr. Butler, my next time I'll come to you on the mortgage renewal issue because it is important. But my time's up. Thank you.
Thank you, Mr. Letao. Monsieur Caron, pour 6 minutes.
Merci, Madame la Présidente.
Thank you, Chair. Mr. Butler, you have a podcast known as Angry Mortgage Podcast. You don't seem like an angry man to me. So, in acceptable language for parliamentary audience, what annoys you most in the market, especially concerning household debt?
I'm on CTV sometimes, so I can clean it up. The most concerning issue that is prevalent today is even despite of a drastic reduction in house prices, it's not enough. It's not enough to bring the average Canadian and young Canadians to a point where they can easily afford homes. And this is very meaningful. I mean, I support the idea of developing smaller centers, smaller cities getting bigger. But the way the world works is the action is in larger cities. It just is. We've seen Calgary grow. We've seen Edmonton grow. And they are feeling the effects in the price matrix of those things. The point that I would make is simply this, and this is not necessarily a federal issue, it might be a provincial issue, is there has to be deregulation on how we allow the building of houses, there's got to be ways to get more land available at a lower cost. There has to be ways just to have lower priced materials in the homes. There has to be ways to address the government just moved on that matter in Ontario to reduce the massive charges that municipalities have put on new home builds. So that's been a crucial issue that has relentlessly increased the price of homes.
Merci. Sur un autre thème.
Thank you. On another topic, when we look at social media, and TikTok, for example, a lot on TikTok, we see that there are many people who are informed on personal finance, how to get rich, how to invest, from people who could be recommendable or not. And there is a sort of real estate fetish there. Real estate market is seen as a way of getting rich quick. There's speculations. So what do you think about the quality of information that the young first, second, third time buyers how do they access that information? Is it a good practice? And did you see some people who became financially vulnerable by using those techniques of buying and refinancing their mortgages, like serial buying and refinancing of their mortgage?
The most popular mortgage person in social media in Canada is Québécois. He is Pierre-Charles Jolicoeur, and he has an enormous following in the province. It's far outdistances anything that I've accomplished in English Canada. But you make a great point that...
Est-ce que vous le laisseriez vous
Would
conseiller?
you let him advise you? Would you listen to his advice?
Est-ce que vous pensez que ce sont
Do
des
you think that... Well, this is my question. Do they give good advice? Are they good investment techniques that are being given? And ultimately, the people who listen to those people advising them, should they invest in other productive activities rather than those?
It's almost universally bad advice. It is almost exclusively trickery. It's almost exclusively memes. It's really bad advice in general. And look, it's a free access platform. Anyone can say whatever they want on these platforms. And unfortunately, the majority of the financial advice that's given is pretty bad. So I would support that concept.
Jusqu'à
Until a few years ago, buying property was seen as a good way of accumulating capital, and most households, yes, they had like pension funds, etc., but that was the primary way of gaining capital. Do you think that is still true today, or should we consider real estate investment as something to invest in? Because I have a feeling that we're kind of cannibalizing the money that we could invest elsewhere by using it in real estate.
Correct. The reality of life is that all of the advice over the last 15 years to run out and create a real estate empire was terrible advice, because it's all leveraged. It is all self-serving and self-fulfilling. You are correct. In reality, people should have bought one home, should have put money into inexpensive ETFs, and just husband their resources. Because every time you recommend leverage in terms of investment, you are taking on an outsized risk that you, in all likelihood, should have not have taken.
Rapidement,
Very quickly, what is the importance of having a borrowing to buy a car? Does that also impact the capacity to buy a home?
Unfortunately, it's incredibly easy to buy a car, incredibly easy to buy a very expensive car, and it will come back to bite you in the end.
Okay,
That
thank you.
is something we've experienced in our
Thank
business.
you, Mr. Butler.
We
We're
see
going to have
huge
to
payments.
end it there. We're going to continue now with Mr. Halon for 5 minutes, please.
Thanks, Chair. Mr. Butler, thank you for being here again. Current Heritage Minister, Mark Miller, who used to be the Immigration Minister, slammed his own government at the time, said immigration was out of control. Can you tell us about the impact of the Liberals' out of control population growth and the effect it had on not just on housing, but overall on the debt?
The 3 years of extreme immigration. So we looked at 3 years where almost 3.5 million people came to Canada. Canada itself, government's done a fantastic job on immigration for decades. It's one of the most important, possibly one of the best features of our country. However, 3.2 million people coming in an incredibly short period of time created such an impact on housing resources. It impacted healthcare resources, and it impacted education resources, but it absolutely created a devastating impact on housing. And new Canadians rent. New Canadians don't just appear and buy a home; they rent. and the rental rates in Canada soared in every province except Quebec. So so that is something that had a really severe economic impact on so many Canadians, and unfortunately on young Canadians and on lower income Canadians. They're just the rise in rents was so spectacular that it impacted everyone.
Is there a long-term effect of this?
The long-term effect is a slingshot to the point where now we're going to have excess rental inventory as the population of Canada reversed about 65,000 the previous quarter. We're going to have excess rental inventory, and we have an ocean of unsold dog crate condos in Toronto that will take a long time for that inventory to clear.
You've seen the RBC report, I imagine, that shows that there's a lost Liberal decade where about $1 trillion of our investment went out. Can you talk a little bit about that and the impact it has on housing?
I would say this: the difficulty was an obsession with investing just in real estate as a mechanism towards wealth, and the negligence to a certain extent was, while productive money could have been going to resource, to manufacturing, to other job-creating scenarios, we saw money going strictly to real estate and helpful to construction workers, but in the end, it creates a glut, and there's no more work for the workers.
Right. This government, the Liberal government, is known for its massive money printing, massive deficits. In fact, Mark Carney now, the current Prime Minister, has doubled the deficit of even Justin Trudeau. If we can, even I was surprised by that. All this money printing, these deficits, what does that have to do? What does that do to the middle class, and what does that do for taxes later on for young people looking to get into home ownership?
Well, we've seen the issues of accelerated asset growth, the outcome of much deficit. By the way, this is a problem throughout the world. In the whole Anglosphere, we see where there's been great deficit spending. We've seen asset inflation. And that asset inflation aids people who are wealthy or already own homes and harms people who are young and don't have adequate income to buy homes. So that's been an obvious outgrowth of what we've seen for the last number of years.
Ms. Bednar, I want to get you in as well. Canadians are taking more non-mortgage debt, more than ever before. According to Equifax, the bottom 75% of earners in Canada have a debt-to-income ratio of at least 200% and over 480% for the bottom 20% of income earners. What impact do growing household debt levels have for first-time home buyers and for young Canadians?
Maybe I'll speak broadly to young Canadians. About a decade ago, I was chair of the expert panel on youth employment. So young people, younger people, and the economy is something that I continue to follow. I think what we're seeing is some of the challenges with accessing affordable homes, and that could just be through an affordable rental items that allow people to save money and live. We're starting to see that reflected in happiness surveys and young people's forecasting around their own ability to prosper and succeed. So that's why I bring it back to broader, kind of bigger prosperity opportunities and how we're growing the economy and what other complementary public policy tools we have.
Thank you,
beyond
Ms. Bednar. I'm
the
going
negative.
to have to end that there. Thank you, Mr. Halan. We're going to continue now with Mr. Sawatsky for 5 minutes.
Thank you, Chair, and thank you to our witnesses for coming in today. Ms. Bednar, in your opening remarks, you were talking about buy now, pay later. This has become an increasingly common situation, and you mentioned with younger Canadians. I actually was seeing a joke about an ad where people could finance a pizza, which just goes to show how common this is, even for small transactions. Where does financial literacy come into play here? How can we educate younger generations about what's in the small print there? What would you see what are the first steps we can take to kind of reduce some of this being such a common occurrence?
I actually don't think it's good or bad that we have a lot more people engaging with buy now, pay later. I think where the failure is our regulatory infrastructure, right? You could argue that buy now, pay later is a really savvy competitor to the Visa MasterCard duopoly, where a zero interest, front loading somebody at zero interest, the ability to break something up into 4 payments is actually kind of great. And we see this reflected in other policy areas. For example, a dental program we have that allows people to access dental care up front and pay it off in installments later that are interest free. So I don't want to discount financial literacy as being an element here, but again, when it's not reflected, when we haven't decided whether we see this as a credit product or a loan product, for young people, buy now, pay later could be a vehicle to build credit, right, outside of a credit card, in the way that we've seen that ability through incredible Canadian fintechs like Borrowell that allow people to use paying their rent on time as a vehicle towards credit. So I'm more saying that, often we think of sovereignty, we talk about it as a deficit, something that we don't have, right, or that we don't do. But if you think of just keeping it in line with young people, like doing a quiz in a magazine, can you govern the markets you have, yes or no? Often we're talking about on the no side, but on the yes side, the quiz isn't over. The next question is, great, are you? And I think with buy now, pay later, there's a yes, no there. And right now we're on the no side, and we need to get to the yes side, because young people, like all Canadians, expect that our legislation reflects the reality they live every day, and right now it doesn't.
Thank you. And what would you say are some of the more predatory practices with buy now, pay later? Are there certain instances where this is particularly bad? I know you mentioned some good aspects, and that's nice to hear. What would be some negative ones?
I mean, I had a laugh at the pizza one too. I think I saw it with a burrito, like installments of a burrito, right? But it was a partnership with like Uber Eats or something like this. So it's good to have a laugh, but also recognize what's out there in the marketplace and what people are using it for. Social media is also a vehicle that allows us to have access to how other people live and what their lives look like in a way that we never quite had before, right? And that can also entice and encourage supplementary spending outside of essentials, right? When you're keeping up with people in your feeds, or sort of the algorithm. So I would also put forward, because it's so easy to engage with and it's just kind of a click away, I understand why people may think, if they see it as an option at a checkout for something that's simple or traditional, that it is part of the infrastructure that we understand. And I'm not advocating to hurt people's credit scores, but rather protect young people that may become quickly over-leveraged in a way that they don't realize and can hurt them later, outside of burritos.
Thank you. And so you mentioned some further regulations. What could those regulations look like?
The big question is whether we want to deem this a credit or a loan product in Canada. And it seems that other jurisdictions are looking at it more like a credit program. It basically reverses layaway, where you used to be able to pay for something in installments, but you got the prize, you got what you were saving for at the end of that journey. And now we're front-loading it, right, which does a lot for dopamine and gratification, and can feel confusing too, right? You get something kind of important that you may have coveted or that is necessary for daily life, and it has a longer tail with the payment structure. Again, ultimately, it's about asserting the right jurisdiction, recognizing that this product is out there. We've permitted it in our digital economy. That happens more and more, but it's incumbent upon us to respond to it appropriately.
Thank you. And what would you see as, what's the best case scenario? Had we taken all the steps that we should here, how could this look in a good situation?
Apologies, you'll have to get to that in another
later.
Response.
Yes.
That concludes your time. Thank you, Mr. Sawatsky. On va continuer avec Monsieur Garon pour 2 minutes et demie.
We will continue with Mr. Garon for 2 minutes. Thank you. I'll continue in the same vein as my colleague. So if we want to understand the problems of debt, we have to understand the psychology of those who are borrowing. So with the buy now, pay later, maybe we could have bankers who would tell us that it's just another financial product that is offered on the market and that smart people would use it smartly. And when these products come into the hands of people who have issues with self-control, who like instant gratification, and when we have budgetary constraints and we want to consume right now, that product could make us more financially in difficulty, and that could start a sort of downward spiral financially speaking. So I want to know, what is the popularity with that practice? Now, when we see the popularity of that practice, what does it say about our needs and the way our environment creates our needs? Would that be another source of why so many people are in debt today? I also want to know the fact that many people are using that product. Is that an early warning sign of financial problems in the future? And what is the profile of the people who use it most? Because my grandma, for example, she doesn't pay for her groceries in 12 equal payments. So what is the category of people who use that? I give you the floor to answer.
Yeah, my grandmother pays for her groceries in cash too. The information that's available suggests it is younger Canadians 30 and under who tend to turn to buy now, pay later. And because we don't integrate it into sort of our ledger of global household debt in Canada, which as you've heard is already quite high and rising, it's invisible to policymakers, but it's also invisible to the various buy now, pay later programs. So they have a harder time deciding who's credit worthy. Unless, say you've been with one of the giants, a firm, and you've defaulted on that buy now, pay later, they'll understand and be able to make a decision that that option may not be available to you. But because there are many of these products in the marketplace, that's how people can sort of stack that debt. And I think in terms of the key indicators, what also matters is when and where people are using it. So again, you move somewhere, you need a couch, you need a mattress. This makes sense in a particular way. The concerning element of it being used for groceries, everyday essentials, really I think is symptomatic of that affordability problem and the broader prosperity problem. It's not that buy now, pay later.
Sorry, Ms. Bednar, I'm gonna.
It's bad. Oh my God, I'm so
cut you off
sorry.
there. No,
I'll speed it up next time.
Yeah. Well, it's a condensed round.
Yes.
We're
Okay.
now going to continue with Ms. Kobina for 5 minutes, please.
Thank you, Madam Chair. My question is for Mr. Butler. In your opening remarks, you were talking about how you would love to see or to go back to more ordinary Canadians making an ordinary income, being able to afford a home. And of course, we used to see an average age of 27 years old when you acquire a home. Now we're in about 40 as the average age. So clearly there's a problem here that we need to address. We have seen the government respond with a fourth housing bureaucracy, but yet we continue to see reports that there's still even 100,000 construction workers that are at risk of facing layoffs, and we are still seeing struggles from Canadians being able to enter the housing market. What are your thoughts on this fourth housing bureaucracy as a solution to the problem?
It's no secret that I never understood Build Canada Homes. I never understood why the agency was created. I don't understand how it's going to move forward to accomplish very much. Because in the end, we had existing bureaucracies who could do the same thing. We had Lands Canada, we had CMHC. CMHC runs splendid programs in those areas. The idea, and we have to also understand really clearly that there's absolutely no home that Build Canada Homes will develop that will ever be sold to a Canadian. This is social housing and purpose-built rentals. There's never going to be a home for sale that ever comes out of Build Canada Homes. And that's my entire critique. The greatest thing we could do in Canada is make it possible for more younger middle-income people to buy homes in places they want to live. I mean, it is a good idea to develop smaller centers, but why would we want to insist that young Canadians move far, far away? Why would we insist on people? You can't live in Burnaby anymore. You got to go away to Hellengone somewhere else. Okay, you can't do it because it's just too expensive, and it'll be too expensive forever. So that's my problem with the whole approach. Is that more social housing is a great thing. Yes, people who have problems need housing, but it's not helping young people buy homes.
And it's interesting because there was a recent M&P Consumer Debt Index report that found that young Canadians are actually the most likely to feel financially paralyzed. Do you see that in your line of work as well?
Well, we don't see it too much because the truth is they've given up. They don't call a mortgage company. They know they can't get a mortgage. I mean, that is probably the most tragic element, is that we don't get those calls. We don't get the calls from people, young people who say, hey, I think I can buy this house in Vancouver. I can buy this house in Markham. I can buy this house in Oakville. We don't get the calls because they know they can't buy it unless they have massive parental assistance.
And you have 30 years of experience in the mortgage market. That's a good thing. What would be your recommendation for the government to better address the housing market problem that we have?
The recommendation is one that is unlikely to occur. It is to let nature take its course and continue to allow house prices to fall. And more than anything else, to find a way to re-energize investment in Canada, like for high-paying jobs, for better-paying jobs, and avoid any type of the wage suppression that which I don't think is the intention of the government, but it's certainly been the outcome that we've seen for the best part of a decade, is that there is a wage suppression that has gone on to the point where young people can't afford homes and middle-income people can't afford homes.
Thank you, Mr. Butler. For Ms. Bednard, you mentioned that obviously, there's some Canadians that are paying for burritos in installments, and even though there may be a deal, or it might not, it may be an alternative to using a credit card. It is a sign of a cash flow restraint, and of course this is a household debt study. But you mentioned something that actually I found interesting. You said the private debt is compensating for public policy failure. Could you expand on that?
Very briefly. The public policy failure is the prosperity one, the one that our wages have not kept up, that our economic growth is so slow that people are so constrained when it comes to wage growth and the cost of living, which is why it's so connected to all these other policy levers.
Great, thank you very much, Ms. Copina. Mr. McDonald for 5 minutes.
I'll question Mr. McKenzie first. Mr. McKenzie, we've heard a lot of testimony here at committee, and the testimony has been arguing that many owners of households, they may appear to be stable, but because of their accumulated home equity, but in practice they could be short on liquidity, and they're vulnerable to the refinancing challenges and the rising mortgage payments when they refinance, cost of insurance, the taxes, and the maintenance costs. So my question for you today is, are you seeing more homeowners who are asset rich but cash poor? Now, I thought that was always a farming term, but I guess it's spread to home ownership as well. So what specific mortgage market changes, whether it's around underwriting or refinancing flexibility or product design, would you recommend to help stabilize these issues?
Well, I think, yes, you're right in that there is a segment of homeowners that are coming up to refinance and that, are asset rich, and because of the price of their home has accumulated, but they don't have the money to pay that higher mortgage rate. I think like refinancing, temporary payment relief are some policy levers, but it's hard in the short term to really fix it. When you look at the debt service ratio, it doesn't seem to be it's going to be a systemic problem across the whole society, or across Canada. But when you look at bigger centers like Toronto and Vancouver, that's definitely a concern. And as far as a policy lever, it's not completely obvious what it would be besides some temporary payment relief.
Okay. And then sticking with you, Mr. McKenzie, Budget 2025 that we've had passed in the House is offering tax relief, but it also offers first-time home buyers a GST rebate. Which of those measures do you think is going to help out affordability the most?
I think both can help affordability, but both to me are almost more like demand side measures. I think to really fix the housing supply problem in Canada and get people out of having to take these oversized mortgages that they can't necessarily afford into the future is to actually build more housing. The supply side is where it has to come from. Like my friend Ron talked about in Toronto, there's many condos sitting unopened or unbought, and the condo market is sort of having a big downturn there. But the demand is really for single family homes, not for condos, for the most part at least. So I think giving the market time to sort of fill that demand and maybe having the government help them do that would be ideal.
Yeah, well, I see in my region of the country, Atlantic Canada, we've seen post-COVID housing prices were driven up by, I would say, out-migration from Toronto and other large centres that took advantage of the equity in their homes and purchased less expensive homes in rural regions. And maybe they wanted to live in less intense population, and COVID made them make that decision. I don't know what their decision making was. But what we do know in Atlantic Canada now, and it's kind of we see rentals coming down. We see the price of homes at least stabilizing and not escalating anymore. And if you talk to real estate companies, their sales have slowed down considerable, which with the right type of building going forward, we should be seeing the home ownership issue for young Canadians more affordable. Would you agree with that, or can you speak to that?
Yes, generally I would agree with that. I'm familiar a bit with. I was actually living in Atlantic Canada during COVID, so I followed sort of that movement out east. But I think certain factors like work from home and drove people to be able to live in different areas. But yes, I think the type of housing offered is a major consideration when looking at this, because people want different types of housing. The demand across the board seems to be for detached single-family homes, but
thank you, Mr.
there's different
Mackenzie.
density considerations as well.
Thank you, Mr. Mackenzie. Thank you, Mr. McDonald. That concludes the time we have for this hour. On behalf of the committee, I would like to thank our witnesses for your time today. We're going to now briefly suspend as we change over for the next hour. Thank you very much. Zoom the meeting. J'aimerais souhaiter la bienvenue
I'd like to welcome our witnesses.
Of Insolvency and Restructuring. We have André Bolduc, licensed insolvency trustee, as well as Wesley Cowan, another licensed insolvency trustee. On a aussi Madame Maude Pugliese.
We also have Mrs. Maude Pugliese, who is at the National Institute of Scientific Research at the University of Quebec.
Insolvency trustee for Hoyes, Mikolos and Associates, Inc. I would like to remind participants of the following points. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. For those on Zoom, at the bottom of your screen, you can select the appropriate channel for interpretation, either floor, English, or French. And a reminder that all comments should be addressed through the chair. As you just heard, all of our virtual witnesses have conducted a mandatory witness onboarding test. Alors, on va commencer à chacun de nos témoins.
So we will start with, and each of our witnesses will have 5 minutes for your presentation. After that, we will have a few rounds of questions.
Association of Insolvency and Restructuring Professionals.
Chair, members of the committee, thank you for the opportunity to appear today. My name is André Bolduc, and with me virtually is Wes Cowan. We are both licensed insolvency trustees, federally regulated by the Office of the Superintendent of Bankruptcy, and we appear on behalf of the Canadian Association of Insolvency and Restructuring Professionals, or CARP for short. I'm the immediate past chair, and Wes is current vice chair. CARP represents nearly 1,400 members and associates working in consumer and commercial insolvency and restructuring across Canada. As frontline professionals, we work directly with Canadians in financial distress, and as the only professionals authorized to provide formal legal debt solutions to Canadians, we see firsthand the consequences of household debt. I will now turn things over to my colleague, Wes Cowan, on trends we are seeing.
Thank you, André. We are also seeing several consistent trends. First, many Canadian households remain under significant financial pressure due to increasing debt levels. With little savings and many living paycheck to paycheck, even a modest shock can quickly lead to a financial crisis. Second, we are seeing longer-term and riskier debt products, especially in auto lending. The combination of higher vehicle prices, loan terms stretching 7 to 8 years, and consumers carrying negative equity is a problem for households. Third, alternative and digital lending, including buy now, pay later products, have expanded rapidly. Once used mainly for small purchases, these products now finance everything from travel to major household expenses. These lending products are easy to access, but they are expensive and difficult to exit. Fourth, cost of housing pressures are increasing. Rents are higher, and many pre-construction buyers are losing deposits and walking away from contracts as falling property values make financing harder to secure. Longer mortgage amortizations may delay distress, but they can also mask underlying affordability problems. Finally, income volatility is becoming more common. Irregular earnings in gig work and self-employment can leave households struggling to match tax obligations to cash flow, often increasing reliance on credit. There are 4 areas we believe where targeted action could improve the resilience of Canadian households. And at this point, I'll turn it back over to André to expand on these areas.
The 4 targeted actions that could improve the resilience of Canadian households are the following. First, we believe that stronger federal-provincial alignment is needed to improve consumer protection. Rules on issues such as statute-barred debts, collection practices, credit reporting, and consumer remedies vary widely across provinces, creating confusion for consumers and regulatory gaps. Second, stronger protections are needed against false and misleading advertising of debt solutions, along with clearer direction to trusted sources of advice. For example, Google offers a useful model where in Canada, only federally regulated licensed insolvency trustees may advertise debt services on its platform. We believe that similar standards should apply across other digital and social media platforms. Third, CARP supports having responsible lending guardrails that preserve access to credit while reducing harm. Possible measures could include limits on auto loans where there is negative equity and clearer disclosure for high costs in digital lending. And of course, more consistent oversight across all types of lenders. Lastly, financial literacy efforts should continue to be strengthened. Licensed insolvency trustees contribute to financial literacy through the mandatory counseling we provide in bankruptcies and consumer proposals, but we believe that more could be done. CARP remains committed to working with the OSB and the FCAC to help Canadians access reliable and timely debt advice. We look forward to answering the committee's questions. Thank you.
Great, thank you, Mr. Bolduc. Thank you, Mr. Cowan. On va continuer maintenant avec Madame Pugliese pour
We will continue now with Ms. Pugliese for 5 minutes. Sorry about that. Good afternoon, Madam Chair and committee members. Thank you for inviting me to appear before you. I'm a sociologist and a professor at INRS, and we work on financial stability and inequalities in debt. In 2022, I conducted a survey on 4,800 adults in Quebec to document their debt levels, and my presentation is mainly based on the results of this survey. I also submitted my full research report to the committee for your information. First of all, I'd like to underscore the importance of distinguishing between debt and over-indebtedness, that is, debt that has become difficult or impossible to repay. So it is in these situations that cause stress and a deterioration even of financial health, particularly due to accumulation of interest. My study shows that despite the scale of household debt in Canada, over-indebtedness does not affect the majority of people, but it affects a significant minority. In Quebec, in 2022, 66% of people were in debt. And of these 66%, 10% had great difficulty in repaying their debts or were unable to do so. And added to this group, 18% experienced difficulties from time to time. So that's a considerable percentage. So we need to understand what leads to excessive debt in order to put effective preventive measures in place. My findings suggest that it's not only a matter of debt levels or financial literacy or overconsumption. The determining factor is the context in which the debt was incurred. People struggling to repay their debts have generally taken on debt, not as part of a planned investment, for example, buying a house, but really to compensate for a lack of resources, often linked to a destabilizing life event. So in such cases, debt is taken on urgently as a last resort to meet essential needs, frequently using high-interest credit products. We called them during this session. We mentioned some of them in this session, so we know them. And it's because there are no other options, or because people are unaware of them. My research has identified 3 main situations leading to this type of debt, which I refer to as compensatory. Firstly, supporting children and relatives. 12% of people, mainly women, having gone into debt, report that they went into debt to fund parental leave due to a lack of access to childcare or when caring for a family member. Secondly, 11% of people took on debt to cope with job loss, often linked with health problems. And finally, 4% of people took on debt to cope with a combination of financial difficulties generally associated with chronically low income. So more than half of those who took on debt for these reasons were experiencing difficulties in repaying it. So to prevent excessive debt, I believe we must act proactively by strengthening people's ability to cope with these situations without resorting to expensive credit. I could suggest 3 main approaches. Firstly, strengthen some social programs, particularly family policies like child care, parental leave, support for informal carers, as well as programs relating to job loss and disability. Also, improve awareness of available programs and alternatives to credit during life transitions that may lead to compensatory debt, such as maybe the arrival of a child, job loss, or illness, through financial education and advice initiatives designed to reach people at the very moment they are experiencing these situations. And also, we must recognize the genuine need for short-term credit among people with low incomes or experiencing a significant loss of income. For many of them, saving for essential expenses like winter clothing or any other emergency is very difficult, and so they unavoidably resort to credit for these expensive items. However, for those on lower incomes, short-term credit market is dominated by alternative lenders who are often more expensive and subject to less regulation. For example, banks often exclude these individuals from their best offers, particularly their rewards credit cards. They're excluded from those, and indirectly. Please conclude quickly, Ms. Pugliese. Yes, so they have high interchange fees. So programs aimed at developing affordable short-term credit that meets the needs of people on lower incomes and accessible to them would help prevent problematic debt. And finally, I want to... sorry, Ms. Mode, we have to stop here.
Minutes, please.
Madam Chair and honorable members of the committee, thank you for the invitation. My name is Doug Hoyes of Hoyes Michaelis. I am a licensed insolvency trustee, and over the last 27 years, my firm has helped more than 75,000 Canadians formally deal with their debt. Let me give you 3 observations on what we're seeing on the ground right now. First, this isn't a new debt problem. It's the same problem stretched further. Canadians are carrying more debt for longer before they run out of options. Based on data we gather from our clients and publish annually in our Hoyes Michaelis Joe Debtor bankruptcy study, the average insolvent Canadian now owes over $67,000 in unsecured debt, spread across more than 10 creditors. That's not one bad decision. Canadians are layering debt on top of debt, using credit as a coping strategy. By the time they come to see me, they're not dealing with one problem, they're dealing with 10. Consumer insolvency is a lagging indicator. People don't rush to file. They exhaust every option first, refinancing, balance transfers, minimum payments, before seeking formal help. So what we are seeing today is financial stress being stored, not resolved. That doesn't fully show up in today's numbers, but it will. Today's relatively modest increase in insolvency filings understates the pressure building beneath the surface. That pressure will lead to a higher number of insolvency filings over the next 12 to 24 months. My second observation is that the federal government, through the Canada Revenue Agency, is a creditor in over 40% of personal insolvencies. Based on my estimates, approximately $1.4 billion of CRA debt was included in consumer insolvencies last year. In most cases, the best outcome for all parties is a consumer proposal, where the debtor repays a portion of their debt and creditors receive more than they would in a bankruptcy. But in practice, we are seeing a growing disconnect. As you may be aware, the Office of the Auditor General of Canada recently identified significant service delivery challenges at the CRA. I have the same concerns. In practice, when CRA is a significant creditor, consumer proposals may take months to be reviewed, and in some cases, CRA requires repayment terms that exceed what the debtor can realistically afford. The result is predictable. The proposal fails, the debtor files bankruptcy, and everyone, including the government, recovers less. The debtor was willing to pay more, the system just didn't allow it. This is not a policy problem, it's a process problem. If the goal is to maximize recovery, then decisions should be grounded in what is achievable, not what is theoretically recoverable. Finally, I would also like to address the issue of unlicensed debt advisors. we continue to see cases where vulnerable Canadians unwittingly fall prey to unregulated advisors who charge significant upfront fees for unnecessary services or, in some cases, harmful ones. These consumers often arrive at a licensed insolvency trustee later with fewer options and worse outcomes. As the Superintendent of Bankruptcy noted in her testimony before this committee last week, she has made progress in this area, and I commend her for that and encourage continued enforcement. Canada's insolvency system is fundamentally sound. It balances two objectives, maximizing recovery for creditors and providing a fresh start for the honest but unfortunate debtor. But right now we are seeing strains in how it operates. Financial pressure is building, process decisions are reducing recoveries, and vulnerable consumers are still falling prey to unscrupulous debt advisors. These are real problems, but they are solvable. If we focus on what people can realistically repay, we will improve outcomes for debtors, creditors, and taxpayers. Thank you. I look forward to your questions.
Great. Thank you very much to all of our witnesses for your opening remarks. We will commence with Mr. McLean for 6 minutes, please.
Thank you, Madam Chair, and thank you to the witnesses for your appearances today and your input. My first question is going to be to Mr. Cowan. Mr. Cowan, you talked about longer-term debt commitments, and you referenced the cost of housing and how it's affecting Canadians that are in some kind of trouble right now. And you talked about longer amortization periods. And if you could just quickly give me what you think the right amortization period is for a mortgage that has increased significantly over the last number of years. What's the correct number, in your opinion, about the amount of time we should amortize a house over?
Oh, thank you very much for the question. It's a difficult thing to sort of pin down. I mean, obviously, right now, what's happening for a lot of Canadians, although interest rates have fallen back over the
So
past
if I can,
years.
Mr. Cowan, it's a straightforward question. What's the number of years you think we should amortize a house over in a mortgage period?
Well, I would say that it's probably what it's been more traditionally. 25 to 40 years is a reasonable period of time.
25 to 30?
Well, ideally, yes.
25 to 40 is way too long, way too large a spread. Can you give us a number, please?
Well, I mean, this is a personal opinion. I'm not an economist, but I would say based on what I've seen, I would say probably 30 years.
Thank you. So 30 years, and personally I'd say 25 years, but that's maybe I'm a little tighter than you are. The issue, can you tell us about when the Bank of Canada drops interest rates, its baseline rate, it is to stimulate the economy and to stimulate people into houses. Can you tell us if that, in your opinion, has any effect on the price of houses?
Well, I think we certainly did see this during the pandemic when interest rates were quite low and there was an opportunity for people to get into a house and their mortgage, the amount of their mortgage, monthly mortgage cost was, affordable. So that, I think that...
Mr. Cowan, I have limited time. So I'm asking you straightforward questions. Does dropping in interest rates on mortgages inflate the cost of housing?
I would say, in my opinion, it does.
Thank you very much. Any idea how much it inflates the price? If you drop it from a baseline mortgage from 4%, for instance, to 2%, how much would that inflate, say, a $600,000 house?
Sir, that's an answer I cannot give you. It's outside my wheelhouse.
Okay, thank you. One of the issues that the government has said here is they're going to build houses at levels not seen in generations. Once you inflate the market of housing, what do you think the obvious result will be on the cost of those housing because of the inputs and the labor required to do that, and therefore the price you're going to have to sell those houses at?
Well, if the price of housing overall has gone up, then new builds will also be at a higher level, at a higher price. But there'll be as long as the demand is there for them. So.
Okay, so if we build more houses and it costs more to build those houses, the prices are going to have to go up as well. Would that be correct?
Except that if there's more supply, then as a result of that, the price of housing should stabilize or come down if there's more opportunity for buyers. There'll be more competition in the market.
We often say that people don't buy houses, they buy payments, and those are mortgage payments. So in a stabilized environment, as far as building housing and financing housing goes, how many houses per year should we be building in Canada, in your opinion?
That is a question, sir, for an economist, which I am not, so I wouldn't venture to go there.
All right, then I shall move on to Mr. Bolduc, if I may, or you. Right now, Canada has the highest debt in the G7 of all countries, and that's consumer debt as well. 103% of GDP of consumer debt alone, not counting all the government debt that would layer in at a significant level on top of that. But 177% of disposable income is consumer debt, and yet our debt service ratio in Canada is higher significantly than it is in the United States. It's about 14.6% of disposable income in Canada versus about 11.3% in the U.S. Can you tell me why we have that differential with the United States, why Canadians are spending so much more on interest than our neighbors just across the border south of us?
Well, we're spending more on interest because we have a higher amount of debt, quite simply. We do follow the debt-to-income ratio quite closely. The other ratio, not so much. So it's simply that Canadians are carrying more debt. And also I would point out that our savings rate in Canada is lower than what it is in the U.S. as well. So people have less of a pad to fall back onto. So,
and yet at the same time, the Canadian bank rate is much lower, 150 basis points lower than the U.S.'s bank rate. So somehow we're missing something here where consumers are suddenly more exposed in Canada versus the United States. One of your predecessors in the last panel said this was a result of wage suppression in Canada over the last 10 years. Do you have any comment on that?
Very briefly.
I'm not sure I would phrase it exactly in that way, and I'm not an economist, but I think that in the U.S. they have more disposable income, and generally wages are higher comparative to Canadians.
Thank you, Mr. Bolduc. Thank you, Mr. McLean. We'll continue now with Mr. McDonald for 6 minutes.
Thank you, Madam Chair, and thank you to the witnesses. Mr. Hoy, you were talking about the consumer insolvencies, and I was noticing when I was doing my research that, prior to, let's say, the pandemic, we've seen a lot of consumers go through bankruptcy. Today, it's proposals. So that trend obviously is better. It probably gets a better return for everyone affected by an insolvency situation. Is there one point in particular that drives these? And I'm thinking in terms of, is it housing costs? Is it food and everyday expenses? Or is it debt accumulated gradually through credit cards and unsecured borrowing? Is there one of those factors plays a bigger role in what you see? Are
you asking about why there are more consumer proposals than bankruptcies, or why more insolvencies in general?
Why more insolvencies in general? That was just something I noted, that now we've gone to proposals rather than bankruptcies.
Yeah. Well, there have always been life events that have caused insolvencies. Lose your job, you get divorced, medical issues, that sort of thing. So, and that has always been the case. What we are seeing an increasing now is that people are coming to us who have not had a specific life event. What happened? Well, my expenses are much higher than what my income is, and I just can't keep up. And so that's why we're seeing an increasing level of debt over an increasing number of creditors. So it's become more of a structural problem rather than a one-time event that is tipping a lot of people into insolvency.
When you look at, because people don't talk about a bankruptcy or an insolvency situation, when they acquire the services of a company like yours to put a proposal forward and they're successful, is there an average cost to what that would cost? And I'm just asking that out of my own curiosity.
Yeah, if you wanted me to pick a number out of the air, I would say it is roughly a third of their total debt. But there's a significant range. It could be 10%, it could be up to 100%. But that's sort of the area where creditors are generally willing to accept it, provided that return is greater than what they would receive in a bankruptcy.
Yeah, and you pointed out the point on the Canada Revenue Agency has maybe not been a willful negotiator on these proposals. Are you recommending that government change regulations to try and, no?
No, what I'm recommending is we create a coffee club where licensed insolvency trustees, representatives of CRA, and the Office of the Superintendent of Bankruptcy can get together every 3 months, have a coffee, and talk about these issues. Because I think it's just a disconnect between what one party thinks they want and one party thinks they can get. I think if we could talk this out, it's not very complicated. I think the laws are fine. It's just the representatives from CRA are thinking, we've got to recover more money. Yeah, but if it isn't there, you can't recover it. So I think a bit of communication would solve 80% of this problem.
So in these proposals, if the bank is accepting 50 cents on the dollar, then CRA has to be in that same category, 50 cents on the dollar.
Can only afford so much.
Yeah.
So asking someone for this much when they can only afford this much means they don't do it, and it tips into a bankruptcy, and that's not a good solution for anybody.
Okay, I'm going to move on to Mr. Cowan. Mr. Cowan, I met recently with a lot of students across Atlantic Canada, university and college students. And one of the things I took from that meeting was they spoke about the amount of debt they start out life with after school. So in lots of instances, it's a lot more than $25,000. And particular in Atlantic Canada, a lot of these students have to be mobile in that they have to go and find work in their careers where the work's available, which increases their need to find either rental properties or down the road when they're established to buy homes. In your experience, are you seeing more young Canadians, particularly in regions like Atlantic Canada, enter insolvency? Are they hitting a brick wall?
I had definitely in my own practice, I've noticed that there are a growing, I think, number of younger Canadians that are running into financial difficulty and sometimes having to seek assistance and possibly insolvency services. I think a lot of that has to do with just what we sort of touched on in our introductory remarks. The nature of work, particularly for younger people, tends to be more short-term, maybe sort of a gig economy kind of a thing. And that inconsistency in their income is what contributes to that problem. And your point towards, the idea of student loans and that, fortunately, the student loan bodies in Canada, for the most part, are very cooperative and try to help students as much as they can with payment deferrals and things like that. So that's a great help to those students, to those young people. But, it is a challenge right now in order to try to maintain a level of income that will allow them that mobility and those opportunities.
And I'll go on with another question for Professor excuse me for the pronunciation. Madame Pugliese, is it?
Yeah,
Okay.
that's perfect.
Wasn't perfect, but it was close.
Mr. McDonald, you only have 10 seconds.
Oh, I'm sorry. If I get another round, I'll ask the question.
Okay, apologies for that. Monsieur Garand, pour 6 minutes.
Mr. Garand for 6 minutes. Thank you. Well, my colleague, Mr. McDonald, almost saved me because I was going to ask questions to Professor Pugliese, and I was going to apologize for poorly pronouncing her name, so thank you for that. You talked about the difference between debt and over-indebtedness, but I believe that in there must be a dynamic, that is somebody who is has a lot of debt without being over-indebted should by circumstance could become over-indebted and would face the problems associated with that situation. So I would like to know, what are the things in the economic environment that can make someone shift from debt to over-indebtedness? I'm thinking here about the fact that we have, for example, employment insurance programs. I looked at some figures and I saw that EI doesn't necessarily cover about 50% of workers in Canada. So how can we move from being in debt to being over-indebted, and with all the trouble that comes with it? Well, looking at the environment, I think it's interesting to mention that this survey was done in 2022, just before inflation came into play, and also with the increase of mortgage rates. And I did the same survey on a smaller sample in 2023, and we saw clear difficulties with respect to paying their debts, and especially with people who took on debt to buy a car or to buy a home. So the environment can have an impact on these kinds of situations. That being said, I still think that issues relating to over-indebtedness are related to the context within which we contracted this debt. So when it's an emergency, when we have no other choice, that is usually when we are likely to find lending products that are beyond our means. That brings me to my second question, because at the end of your initial statement, you were very politely interrupted by our chair, but I know that you were going to talk about the fact that some households also need some credit. There are times when we need credit, and possibly what the market has to offer for them would see these households as high-risk households, and these products would be a very high interest. Or maybe these people don't know the different products, or people don't want to take the time to go and get a credit margin from the bank. So what tools exist for people with low income, and what tools are being used by these people? Well, the tools for these people are very limited, and it's very fragmented. There are some initiatives within communities like credit cooperatives that exist, but there are very few of them. And that's the point that I wanted to highlight, that there is a need for credit, legitimate needs for credit. And right now, supply for these services is dominated by alternative providers. We know, for example, well, can you give us an example about alternative sectors? The worst that you may have seen. For example, loans on your salary, online loans that we take with high interest rates, and all sorts of administrative fees that are not necessarily considered as interest rates. And that could bring the credit to very, very high rates. So asking ourselves the questions, could we support those initiatives that exist within credit cooperatives, for example, knowing that the government of Canada supports the mortgage sector quite a bit? Well, people would say that these people are high risk, and so the interest rates imputed on them are just the result of that risk. So what will you tell those bankers who would say that the market cannot provide the services to these people? Well, I understand that, and yes, it may not be the role of banks per se to provide these services. We may need to turn to cooperatives and also think about, should we be asking more from the banks? These could be interesting initiatives to propose. We need to ask ourselves, do banks have the duty to provide a sort of public service, just like is the case in countries like France? Well, I want you to talk about social security safety net. Somebody just said that people save less than Americans, but we know that in America, people need to protect themselves from any kind of situation that could happen. I talked about the employment insurance earlier that does not cover at least a quarter of employees. So what is the safety net that we could have to prevent that over-indebtedness that could arise from an incident in life? Well, it could happen because of a loss of job or maybe a disability. And so when we're a disabled person, when we have a disability and we have to rely on social assistance, it's a big challenge. And I also want to mention that children, the arrival of a child increasingly is a risk factor. I apologize. We have to stop here. Really, I apologize. Thank you.
Just for Mr. Hoyes, you mentioned in your opening statement that you're seeing that Canadians have higher levels of debt for a longer period of time. Can you expand on that, and what do you think is driving that?
I think what's driving it is the ins and the outs. The incomes have not risen as fast as expenses have, and so how do you bridge the gap? You get credit. And so you have the ability to borrow more and more. There are many different, as I said, we layer. It used to be you'd get a bank loan. Well, now you can get a bank loan, and then you can get a credit card, and then finance company loans, and then payday loans. And so you layer all those things on top, you end up with more debt, and not just a higher dollar number, but the number of creditors you have is also larger, and that's obviously what puts people into more and more trouble.
And you mentioned the statistics of an average amount of debt of $67,000 and an average number of creditors of 10 creditors per Canadian. Is that right?
Yes, that's correct. So that would be like 3 or 4 credit cards, and then a bank loan, perhaps some CRA debt, a finance company loan, and then perhaps, 1 to 5 payday loans.
And you deal, of course, with Canadians that have been driven to insolvencies. And you also mentioned that the numbers that we're seeing in terms of insolvencies today is actually a modest number. Can you talk about that?
That's correct, because there's a big lag effect. If you lose your job today and your income stops, you don't go bankrupt tomorrow. You refinance, you delay payments, it takes a long time. So the problems that are percolating under the surface are going to create higher insolvency numbers over the next 1 to 2 years.
And it's interesting because we had Statistics Canada here in the committee talking about food, housing, and transportation being more than Canadians' income by roughly 104%, and Canadians being about $200 away from not being able to meet their financial obligations. Is that something that you see as well? And do you see that Canadians are going into debt because they're struggling to cover their basic expenses?
Yes, and the expenses you mentioned, well, those are the expenses that pretty much everybody has. So my typical client last year had take-home pay of just over $3,400 a month. If you live in Toronto and you're paying $2,100 or $2,200 a month just in rent, it's not hard to see that there's just too big a gap, and that gap gets filled with borrowing.
And it's interesting because just the other day, the Prime Minister said that affordability has not been this good in the last 10 years, but yet Canadians are turning to debt to pay day-to-day expenses. And you mentioned that is in fact a structural problem. Can you talk about that?
Yeah, we talk about financial literacy, but if my income is $3,400 and my expenses are $3,600, I don't know what more someone can do other than increasing their income or reducing their expenses. That's why I say it's a structural problem, and it's not an easy thing to solve.
So would you agree then that the Prime Minister was wrong when he said that affordability is at its best it has been in the last 10 years?
I don't have historical comparisons. All I can tell you is my clients are coming to me saying my expenses are higher than my income. I can't make a go of it.
No problem. There was an MNP report that showed that 59% of Canadians are actually struggling with housing pressures. Have you noticed that these constraints or concerns in your own line of work?
Yes, and I can tell you that we published the Hoyes-Michaelis Homeowners Bankruptcy Index, which says that only 10% of my clients own a home at the time they file an insolvency. If you go back to 2011, it was more like a third, which I believe Ron Butler made the same comment earlier. If you own a property and have owned it for the last 5, 10, 15 years, everything's good. If you've been a renter or have not had assets, you have not had that same asset growth, you have therefore not been able to resort to refinancing to bridge the gap. So there's absolutely a difference between homeowners and renters.
And how much additional debt do you not see being displayed in the mainstream figures that we are seeing?
Well, we are dealing with obviously clients who are at the end of the road who filed an insolvency. The average Canadian does not have $67,000 worth of unsecured debt, but that tells you where the tipping point is. When you get to that level, unless your income's really high, you've got a problem.
And do you think that this buy now, pay later usage that we're seeing, like, what does that tell you in terms of Canadians being able to
And
afford their
unfortunately, you're going to
necessities?
have to answer that at another time because that concludes your time. We will continue with Mr. Letao now for 5 minutes.
Thank you very much, Madam Chair. I will be sharing my time with my colleague, Mr. Sawatsky. J'ai juste une petite question, Monsieur Bolduc.
I have a brief question, Mr. Bolduc. You and your colleague and others before you, other witnesses before you mentioned this, you talked about car loans as a source of pressure, a source of tension. So can you talk about that a little bit more? What is wrong with car loans?
Look at consumers' budgets. That's probably the second highest expense after housing is the car payments, the gas, the insurance, sometimes a lot more than food even. And if you have a household with 2 cars, it gets compounded. And what we found is cars are more expensive. And you used to finance cars over 4 or 5 years. Now the average is 7 years, and we see up to 8 years. And these are major lenders giving those rates. So payments are getting spread out more. Also, we're seeing people trade in cars that are not fully paid off. And those get traded in at what's outstanding on the loan, not what the car is worth. So you get a new car, you're rolling in the shortfall on the other one, so now you're paying for 2 cars or a car and a half. And I've also seen scenarios where there's 2 cars that were traded in. So when we see them, the shortfall can be $20,000, $30,000. And over time, those additional payments, they grind down on your budget, and it's money you can't spend elsewhere. So that's the problem we're seeing there.
And, you know, eight years to repay an automobile, it's a little much. I agree with you. But I will cede my time to my colleague, Mr. Sawatsky, now. Thank you.
Merci Carlos, merci Madame la Présidente, merci.
Thank you, Carlos. Thank you, Madam Chair, and thank you for the witnesses for being here today. Ms. Poulies, in your statement, you mentioned that people find themselves in debt following a destabilizing incident. Could you specify what type of event that you have noticed more frequently and how does it concretely lead to debt? Well, a first case concerns support that we need to give to children or to a family member. So usually it's when there is a birth and you need to take a parental leave, and that will reduce income. And when you have to go back to work, if there is no child care service available, well, often we have no other choice than to stay longer at home. And it's an unexpected situation, and the child is here, and so we will go and contract loans wherever we can. So that is a frequent situation that we have observed in 14% of the cases that we surveyed. It was that kind of need, a need regarding children. On the other end of the spectrum, it was to help a family member. Maybe a parent has fallen sick, and so we have to reduce our workload. And it's usually women who find themselves in that situation. Another type of situation, a frequent one, is loss of your job because of health, and it's mostly men that are concerned here. And the third case will be a chronic monthly income situation. For example, those who need social insurance assistance, and it usually happens because of a separation. So those are the 3 main cases that I observed. Thank you very much, Ms. Poulies.
I was having a look at your recent podcast where you're talking about global changes, and you know, we've been hearing at times that, you know, explaining these is an excuse. It's not necessarily an excuse. I think it's just important to consider the context. I've got about 50 seconds here, but how would you explain how, you know, these economic shocks can affect consumer confidence?
Oh, sure. Thank you for the question. Well, clearly right now we're experiencing this with respect to the conflict overseas and the impact on oil prices and therefore prices at the pump. We talked about the issue of car expenses. Well, that's a big one for a lot of people, and transporting themselves around to work and to other you know, things like that. And then just generally what we find too, certainly in my line of work is that there is a psychological impact of these external factors on people where if they are feel besieged by the debt that they have already, that they feel even more likely to seek out a solution like an insolvency proceeding in order to solve the problems that they have because of the impact of these external factors.
Thank you, Mr. Cowan. Thank you, Mr. Sawatsky. Monsieur Garon, pour 2 minutes et demie.
Merci, Madame la Présidente. Je continue.
Thank you, Chair. I will continue with you, Professor Pugliese. Are people affected by over-indebtedness? And if yes, how? Yeah. So they are affected in the sense that they are more likely to declare having difficulties paying back their debts. And in their case, some of this debt is student loans that accumulate over time, and they do not have the same value necessarily as they did in the past because they have a harder time entering into the job market, and sometimes as a result of the stagnating salary, as was mentioned earlier. Also, among young people who have lower incomes, in general, there is also the situation whereby young people declare that they are uncomfortable asking questions in financial institutions. They don't feel respected. So if we talk about protecting consumers and giving them advice, we need to find ways to enable these young people feel welcome in financial institutions. Very quickly, because the time is running out, I was asking this question. In another committee, a colleague asked this question. He had spent about 20 years in banks, and he asked the question, are loans too easily accessible? And I'm asking this about young people, and do they have the financial literacy to be able to handle these credits? Is it too easily accessible? Well, I have to agree with a comment that was made previously. Having access to credit could be positive because sometimes we need that, especially when we are young and we need to invest for our future. The issue might be more about regulating the rates. Could financial education and financial literacy play a role in that? I believe so, yes. Very quickly, 10 seconds. What distinguishes between the over-indebtedness in Quebec citizens and the rest of Canada? Well, in Quebec, data is a bit older. Quebec is a little bit less over-indebted than the rest of Canada. Why? Thank you, Madam. That is time. Dear colleagues, we have about 7 to 8 minutes left. Do we agree to stop, to distribute the time, 4 minutes for the Conservative and 4 for the Liberals? Mr. Kelly, you have the floor.
Said debt is not a new problem, that it's a lagging indicator, meaning that people get themselves into debt and it takes many years before it lands at your office. What do you make of testimony we heard earlier today about mortgage renewals, wherein 70% of renewing mortgage customers are paying more than they were paying before, and there is a record number of them. There are more mortgages maturing in 2026 than in any year in Canadian history. What does that say about the prospects for your business in the coming months and years?
Prospects are good.
So
I will be increasingly busy because you're right. I renew my mortgage today. The payment has gone up by $1,000 a month. No problem. I take some money from here, from there, and make the payments. But if that happens month after month after month, which it does, eventually you hit the breaking point.
Right, and we've heard testimony and affirmed by many witnesses at this committee that Canadians are not earning more. Their incomes are not going up. They are dealing with these higher costs, and not just of mortgage credit, not just housing, everything, food, gasoline, all the necessities of life that are going up while their wages are not. They're dealing with it by skipping out on other expenses, exhausting their savings or refinancing. Eventually, this is not sustainable and again lands at your office, or is that a fair?
That's exactly right. For many years, house prices went up. So if I had credit card debt, no problem. I refinance, go back to the ATM that is my house. That is no longer there. And that's why we're seeing this pressure building and building.
Okay, now some are refinancing. In fact, while there was earlier testimony about what's the appropriate length of time to amortize a mortgage, if you extend the amortization consistently, then it almost doesn't matter whether it was 25 or 30 to start with. If you never get under 25 years, sooner or later this comes to a head.
Because you cannot borrow anymore. If the house price is staying the same or going down, you can make the amortization 100 years. It doesn't matter. The bank's not going to lend you any more money, so you can't kick the can down the road any further. And that's pretty much the position we're getting to now.
All right. So the we don't have a lot of time left. I'll maybe just give you a little bit of time because I'm actually interested in the connection you're making with insolvency proposals and the CRA. So is it your testimony that the CRA is not acting even in its own, the best interest of Canadians who want taxes that are owed collected in dealing with other creditors in a proposal?
Yes, I think they are trying to get more than is available, and as a result, it backfires. And I don't think it's anything nefarious or anything like that. I think they've got instructions to collect what they can, and rather than what other businesses would do, which is, hey, look, let's take what I can get, they're holding out for a bit more, and as a result, it backfires. And in some cases, not all cases, I don't want to place a blanket on it, they end up getting less.
So then Canadians, as everybody else, has to make up the difference because they're not collecting these taxes that are owed.
Yes.
Okay, thank you.
Great, thank you, Mr. Kelly. Mr. Turnbull for 4 minutes.
Thanks. Really great conversation today. Appreciate all the witnesses' testimony. As I'm listening here, I think, our economy's gone through shock after shock after shock. We can go back to the 2008 financial crisis. We can think of COVID-19. We've got climate change. We've got the trade and tariff war at this point. These shocks are what have, predominantly anyway, have situationally had Canadians, I think, fall further and further behind. Isn't the challenge really to build a more prosperous and resilient economy such that Canadians who are accumulating debt, for example, I know my grandmother paid 19% on her first mortgage with my grandfather many, many years ago. So we've been in a low interest environment for quite some time that Canadians got used to, rightfully so. That's no longer a stable environment, right, due to all these shocks. So we've targeted supports as a government to individuals that find themselves extra vulnerable, that are in that leg of the K-shaped economy that we've heard so many talk about. An income tax cut for 22 million Canadians in the lowest tax bracket, a groceries and essentials benefit, Canada Child benefit, child care, dental care. We've capped non-sufficient fund fees, and so much more. There's many, many other policies that have been targeted. So I guess, I'm sort of asking myself, okay, what more can we do? We've heard that in many cases, people have been pushed into further and further indebtedness through no fault of their own, that a major life event has often precipitated them to reach that point where their over-indebtedness is something that they can't really cope with. So I guess, Ms. Pugliese, probably mispronounced your name, sorry about that, but you suggested that, people had experienced a job loss, were injured, went through a separation or divorce. A lot of the measures I've mentioned already kind of target individuals with, subsidizing childcare or offering the Canada Child benefit or reducing the cost of dental care. Those must be actually helping those families. What more do you think we should do? Can you acknowledge that those have helped? And can you also suggest anything further that we should be considering?
I think those things certainly help. especially the childcare infrastructure. I think it's quite new, and it's very promising. I think we also would need to do more in terms of supporting people who are proches aidants. I'm sorry, I'm switching between the languages. And perhaps one last thing I would like to mention is the complexity of figuring out what we are entitled to, in different situations. And so I think any initiatives that would be aiming to inform people of the various benefits, that would be very, very useful also. And also, of course, improving the benefits to which people are already entitled.
Thank you. I know that we moved forward with an automatic tax filing system that would help many millions of Canadians access some of the benefits that they haven't been able to access or might otherwise not access. Would you say that that would be a helpful initiative?
Yes, I was about to mention it actually, and I think those kinds of smaller initiatives could be very, very helpful. And also, maybe I can mention the timing of receiving benefits also is very important.
Great. Thank you very much, Madame Pugliese. And I would like to take this opportunity to thank all of the witnesses on behalf of the committee. We appreciate your time with us today. If it is the will of the committee, I will adjourn. Committee adjourned. Thank you.